Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Director of Index Research and Development at Nasdaq Investment Intelligence, to discuss the performance and fundamentals of semiconductors. Mark, it's great to see you as always. Welcome back to Trade Talks. And I'd like to kick this off looking at the flagship index, the SOX, its performance versus benchmark.
Thanks, Joe. Good to be with you as always. And yeah, this is one we've been keeping our eye on year to date. You can see the SOX, which is the short name, the ticker for the PHLX Semiconductor Index, is up over 21%. That is even beating out the NDX, the Nasdaq 100, which has had really a stellar start to the year, up almost 20%. And those are both, well ahead of what the broader U.S. large cap equity market has done, with the S&P up just over 8% year to date. As of yesterday's close. Compare that to what we saw last year, right? Where this index, the semis, were down about 36%, just a little bit worse than the Nasdaq 100, down 33%. Of course, the broad market was also down pretty strongly at just over 19% on a price basis for 2022. And this was, as we all know, kind of a function of a very uncertain and pessimistic macro environment with, inflation sort of out of control for most of the year, the Fed hiking rates at a faster pace than it's done in, something like 40 years. Obviously, the geopolitical turmoil from the Russia-Ukraine war. Basically, it was, maybe the worst possible setup for growth equities that you could think of, is what we saw in 2022. And you saw a lot of those negative headlines filter down into the semis as well, because you had things like, in the US, the Biden administration announcing in October that it was going to start putting severe restrictions on China's semiconductor industry. And a lot of the names in this index, even though they're US names, for the most part, earn a lot of their revenue in China. So actually not a surprise to me that when this index bottomed last year, it was in October, right after that news came out. Then we saw a really nice recovery for about a couple of months, cooled off heading into year end. And then as that inflation news started to turn much more constructive, right? Seeing the peak in inflation in the rearview mirror, seeing actuals coming in a little bit better than people were estimating over the last couple of months. This has just really taken off, and it's taken off for other reasons too. But that macro setup has been really, really constructive, heading into this year as opposed to last year.
Right. And Mark, if we dive a little bit deeper into the fundamentals of what you're seeing in the SOX index.
Yeah, so very quickly, from a fundamental basis, I think the thing people really need to realize is where we've come with this industry in terms of margins. On the left-hand side, you see net margins and operating margins. Basically, we're flat last year, despite all of those inflationary pressures, right, in terms of input costs, in terms of shipping and energy and things like that. Margins held up really, really well for this industry. And in fact, they're pretty much still at record highs when you look at versus the last 2 decades or so. And they've been on this pretty strong, continuous uptrend for, a pretty good chunk of time now, as opposed to what we used to see, which was a lot more cyclicality in this index with the companies in it, where, it used to be that most of your revenue exposure was really, really highly leveraged to what was happening in the PC market and in consumer electronics. And people, in the business of memory especially, right, they'd really ramp up production, then they'd oversupply, then they'd have to cut prices drastically. That would kill your margins. That would produce a bear market in the sector, once every few years or so. We're just not seeing that same type of, cyclicality to the industry, which I'll get into in a minute. But, want to point out again, from a profitability perspective, from a margin perspective, we've held up really well despite the pressures last year. And when you look at what happened to valuations, right, on the right-hand side, PE got down to, 18, even lower than that before year end. But at year end 2022, we were at about 18 PE, 11.5 EV to EBITDA. Those were both at or below if you look at trailing 10, 15-year averages for the sector. So we were trading at a discount to, kind of medium long-term history for a sector that really has tremendous fundamental tailwinds for it in terms of where the demand is coming from in the future. And that's what we're going to get into next.
Right, Mark, and that's exactly what I wanted to ask you, because there is a cyclical nature to semiconductors, but in the same token, they're ubiquitous with everything that we utilize to function in daily life now. So where do you see sources of future demand growth?
Yeah, so this is pulled from ASML, one of the key constituents in the index. And if you look at personal computing, right, you can see this used to be the biggest chunk of the industry in terms of end user demand, right? PCs full of processors, everyone knows that. The projection for growth for the rest of this decade is a compound annual growth rate of only 3%. That's the lowest number on this page, right? And it's not a coincidence that you're seeing names like Intel, which are overly exposed to PCs, actually kind of struggling, right? As opposed to names like NVIDIA, which is up something like 90% year to date already. Why? Because in addition to having all those tailwinds from things like data center and gaming and automotive, which have been huge sources of growth over the last few years and will continue to be this decade. Now, all of a sudden, you've got this AI factor, right? AI news really started to ramp up in 4Q of last year with things like ChatGPT being rolled out to the public. There's been tremendous engagement and uptake of that. What do you need to run a successful AI platform today? You need the most advanced chips in the world, chips that sell for tens of thousands of dollars a piece. NVIDIA is a leader in that space. There are others in the index, obviously, that are doing things that are related to that ramp up in terms of building out the data centers to run AI platforms. But this is really, the secular story that is just getting going that we haven't even quantified yet. Everything else on this page, you're seeing before the news on AI came out in 4Q, where people already knew, look, you got to look beyond PCs and even things like smartphones, which used to drive this industry. You have to look to these other areas where semis are really starting to penetrate pretty much every aspect of everyday life, whether it's cars, whether it's power, whether it's personal electronics or enterprise.
And finally, Mark, what are you seeing in the green energy and EV space as it relates to semis?
Yeah, so this is the kind of the final portion of the equation, right? It's tough to quantify exactly how much more this is going to accelerate semis demand over the next, call it 10 to 20 years. But we write about this in the research that we put out recently on the index and on the space. And when you look at the forecasts of, 25% compound annual growth in things like solar and wind, renewables, right? Which on a megawatt hour basis consumes something like $2,000 to as much as $5,000 worth of semiconductors to produce that renewable energy. And then you think about the smart grid part of the equation where you have to transport, store, manage all that energy in a way that you didn't have to in the kind of old combustion-based grid that we're all used to, right? That coupled with EVs taking off also to the tune of 20, 25, 30% compound annual growth rates forecasted as the kind of base case over the next decade. And you're looking at literally, two of the most important areas of our everyday life outside of the whole AI bucket in terms of energy and transportation that are going to get loaded up in terms of semiconductor demand going forward. And it's just a really exciting time to follow the industry. And I can't emphasize enough, this benchmark has been around for 30 years now. It is the industry's leading benchmark. We're very proud to own it here at Nasdaq, and we're very excited to continue to follow what it's going to do in the years coming forward.
All right, Mark, we appreciate your insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.